Welcome, everybody. Steven Sitkowski here. Glad to have you for my Market Insights. It is April the 13th, and the year just keeps chugging along, doesn't it? Pretty remarkable. It just it's just a rolling. Anyway, certainly happy to have all of you here. As a quick reminder, everything that we do is for informational and educational purposes only. It is not intended as investment advice. All right. So, what are the key announcements that are moving the markets? Well, Trump announced that we now have a blockade, a naval blockade at the Strait of Hormuz. Um, I think the objective is for the Iranians to not be charging tolls to go through that passage. Apparently, they're still in negotiations, trying to come to some resolution. Apparently, after 21 hours of negotiations, JD Vance basically gave up and left. So, how this is all going to turn out, I don't think anybody knows at this point. Markets have been very resilient despite higher oil prices. So, as you might imagine, we hit Iran with the blockade, oil prices go up. One would expect stock prices to fall because higher oil prices are bad for damn near everything, but it's not happening. It is pretty incredible how well the market's hung in there. T-Mobile got an upgrade. Their stock has been falling. Here, why don't we pull it up on a chart and take a look? Because I don't want you to catch a falling knife, but there's the chart. And it looks like we may be down at a support level. Now, there's further support down below this. So right now we're at 192. Down here is about 185. But like I said, you can definitely see, right here, the intersection of those prices. So they seem to be on a pretty good business trajectory. And they got an upgrade with an anticipated price at $260 per share. They also pay a dividend of about 2%. If you look at their PEG, that's the PE ratio divided by the earnings growth rate, 1.25. So, you know, a fair amount of value in this stock. So if we look at the fundamentals, we can see that the earnings are growing at about 15% per year with a current PE of 18. Well, if something happens with their business model, that looks fairly promising and like a fairly conservative place to maybe park some money if you were so inclined. It's not an investment recommendation. 10-year Treasury trades a bit lower at 4.307, not much. It's kind of been hanging around 4.3%. And oil prices, of course, have now moved back up to about $100 a barrel thanks to the blockade. So it's like we get them down to like 95 and then something happens and they shoot up. And then we presumably come to an agreement and they come back down and then something happens and they shoot up. So, market breadth last week vastly improved. So we have the New York Stock Exchange over here. We have the NASDAQ on this side. So the first thing that I like to look at, advancers versus decliners, stocks that traded higher versus lower. So in the New York Stock Exchange, I mean, they did fantastic. Different story on the NASDAQ. 1,875 stocks up, 2,801 stocks down. versus on the New York Stock Exchange, 1876 up, only 875 were down. How about new highs? These are 52-week highs versus new 52-week lows. On the New York Stock Exchange, great. 220 new highs, 122 new lows. So the highs almost doubled the lows. What about on the NASDAQ? Well, definitely improvement from last week, but right now we're at about a push. 419, we're lower, 410 hit new highs. It was almost 2-to-1 lows over highs last week. So we're definitely making some forward progress here. This is last week's heat map. You see a lot of the Magnificent Seven stocks were up on the week, with the exception of Microsoft. Apple didn't do a whole lot. Amazon, a good week. Meta, Alphabet, Nvidia. I'm going to start calling it the Magnificent Eight and including Micron Technologies in that list. So the big winners in terms of category, this is year to date, telecom, fiber optics, which AI is going to need. Those stocks as a category are up 134%. Computer data storage, which again AI is going to need, up 102%. Then we have electronic and semiconductor equipment up 58%. And you can kind of scan through the rest of that list. So everybody thinks the only thing that's gone up is oil. That is not a fact. So if you're looking for value, these are the 10 biggest companies and their PE ratios from highest to lowest. Now, this Saudi Aramco, that's an energy company. They typically have low PEs, but look at Meta at 18, Nvidia at 21. I think particularly you have real unlocked value there. Microsoft, after its pullback at 21, Taiwan Semi 23, Broadcom 23, Berkshire Hathaway at 24. Isn't it interesting? Berkshire Hathaway mostly invest in these very stable, kind of stodgy old companies, and yet the PE is higher than Meta or Nvidia. That's almost crazy to think about. Tech looking cheap on a relative basis. So valuations of tech stocks have declined based on this forward PE, right? They're down here. So this would be the blue, kind of the teal colored. Look at that drop. So we're now in an area where, again, some of these valuations are looking very, very tasty. Volatility has dropped for big tech. The Magnificent Seven's implied volatility has dropped versus the S&P 500. So the thing that scared people about these Mag 7 stocks were the volatility. I didn't blame them. But now it's kind of, those stocks are just like anything else in the S&P, plus a hell of a lot more upside. Insider buying for the XLK, that's the technology ETF, is the highest in 15 years. So the people that are running these companies recognize the value that's there after the price drop. They're taking advantage of it. Are you? This might be a good omen. Every tech boom period has generated higher returns on investments than the last one. We can go all the way back, 1980, the IBM PC launch, right? And then you see the earnings growth. But look at this. I mean, it is now ChatGPT was launched a couple of years ago. And look what's happened and look what is forecasted to happen. Never bet against tech. It's all about power. AI power infrastructure stocks have destroyed both the S&P and Nvidia in terms of return over the last year. So we have Vertiv up 347%. So these are companies that are going to be or are providing power to the data centers. GE Vernova up 228%. PWR, that is Quanta, 136%, compared to NVIDIA at 89%. Energy up 86%. Constellation, that's another energy company, 54%. Vistra, that's nuclear energy. And you compare that to the return on the S&P, there's no return or there's no comparison. So an eye on earnings. Let me just bring your attention over here. So earnings per share growth full year 2026. So this is year over year forecasted. Look at Micron. Earnings are forecasted to move up 587%. Also, look at Broadcom, 65%, and Nvidia, which to me, if I could only put all of my money into one company, fortunately, you don't have to do that. That would be my number one bet, given where AI has been and where it is going, most importantly. Amazon, it looks like they're poised for really nice growth. Look what's happening to their revenues. So in 2024, sitting at 108 billion, they are forecasted in 2036 to be sitting on 600 billion. What do you think that's going to mean for that stock? Amazon, Meta, Nvidia, opportunity. Photonics, optics, memory. Oh my. Some of the returns year to date, and I know this is a little difficult. Let me see if I can yeah, I can blow this up a bit. SanDisk, it's up 200% for the year. Lumentum, 106%. Sienna, almost 90%. Lawndale Basel, 85%. Western Digital, 80%. Dow Inc., 77. So these are all companies that, in one way or another, support what's happening in the world of AI. Market sentiment is getting better. It's still not up to the averages, but notice for bullish for the next 6 months, we've moved up from 33.6 to 35.7. More importantly, the bearish sentiment down from 51 to 43. So people are feeling a bit better. When they feel better, they tend to buy. Their buying cause prices to go up. And that's why we follow this. The fear greed index, which a year ago was in extreme fear, a week ago it was an extreme fear. Now we're kind of in the moderate fear area as we keep working our way, I think probably back to neutral over the next week or so, unless something goes crazy in Iran, and that's always a possibility. We are definitely in a news-driven market. So the future of interest rates, of course, this is anybody's guess. A lot of it's going to have to do with oil prices. If they stay like they are now, and I wouldn't expect that, we're not going to get any rate cuts. But based on current forecasts, we're looking for the first rate cut right now to be in July of 2027. It's a long way away. So this market needs to be driven by earnings, not Fed policy. Speaking of which, now we're going to start getting earnings announcements this week. And most of them are going to be financials. So we've got on Tuesday, BlackRock and Citibank are coming out. On Wednesday, PNC. On Thursday, we get Taiwan Semi. That's could be a biggie. PepsiCo, learn a little bit about the consumer. Netflix, see if they can get back on their feet. And then we go back to financials with Truist, Ally, Regions Bank. So it's not a huge calendar, but these things will start to move the markets based on what the numbers are and also based on their guidance. So, news of the week. Let's see what we've got. This week's major economic reports. It's not a particularly busy news week. Existing home sales were down. I think the lowest level in 9 months would make sense. Interest rates on mortgages are up. Whole lot of Fed speak. Um, we got, or we will be getting the small business optimism index. See how small business owners are feeling. Producer price index, so that's inflation at the wholesale level. That's forecasted to come in at 1.1%. That's month over month. That's 13% annualized. Core PPI, though, take out energy and food, up 0.4%, which would be lower than last month. Wednesday, there's nothing going to move the market there. The Fed Base Book, which is their report on the economy, that could be particularly telling. We'll get our initial jobless claims out on Thursday. Now, next week, we get our PMI numbers, Purchasing Managers Index, both services and manufacturing, that'll be coming out. We had a lot of news that came out last week, a ton. So if you wanted to review that, you can go to the Market Watch site. And frankly, most of what came out last week wasn't good. I'll just, I'll just tell you, it wasn't. All right, let's take a look at the charts because everything is in the charts. So let's start off looking at the S&P 500, which is much improved. So every week I talk about, how the market was trading in a pretty narrow range between 7,000 and 6,800. Remember hearing that over and over again? Yeah. So that's where we were. Then we broke below that, have subsequently recovered on the hopes that we end the war in the Middle East. Now we're back up above 6,800 right now. So I'm pretty comfortable at the moment. We're at 6,844. If we can get above 7,000, that might happen. We'll see how the earnings season go and what happens geopolitically. But then we can take that next leg up. I made a prediction that we'd have double-digit returns for the year. And right now, let me check something real quick, and then I'm going to come back to this. I want to see where we're at um, year to date on the S&P. So I'm going to come over here to stocks, stock market sectors, and year to date. Look at that. S&P is up. How much is it up? 0.05%. So let's just say we've gotten back to break even. So now can we move up another 10% to make me right? I think it should for, no other reason than to make me right. That's what this should be all about. And I also like to check in on the VIX, which is the volatility index of the S&P 500. I've drawn a line at kind of the typical range, 13 to 25. Some have the typical range down here at 20. I don't see it, do you? I think that's a typical range. We are now under 20, by the way. You can see we're way down here. We're at 19.59, almost in the mid range between 13 and 25. So, what does that tell you? People are feeling pretty confident right now. I mean, they're not complacent. Complacent is we're down, at 15. We're not even close to that. But look at where the peak was up here at 31. So we've gone from 31 down to 19.59 at the moment, which means people are feeling a whole lot better about things. But I'm just going to tell you, we're not out of the woods. We are one announcement away from something either really good happening or something really bad happening. And I can't tell you what that announcement will be. It's kind of a 50-50, but I'll be keeping an eye on it and sharing with you. So thanks for hanging with me. It's always fun. Have a fantastic week. And until next time, be safe, be blessed. Bye for now.